Welcome, friends. Today, in this session, BOS for Success, organized by Board of Studies Academic Wing of ICAI, I see Ashish Gupta, Deputy Director at Board of Studies, looking after the paper of Strategic Financial Management, welcomes you all. Now, as per practice, since our exams are near, so this session is basically to give an overview overall about the syllabus. Of course, I am hopeful that almost you have prepared your syllabus and you are just in a process of revision of the same. So students, let us start with our session. Now, since it is about 1 month before examination, and as usual in my last class of the your LVCC live coaching classes, I have given you idea about how you can divide your preparation in 3 steps. So that is 1 year before examination or 1 month before examination. Then there is a on the due during the due 1 day before examination and during the examination. But how now today I will concentrate on 1 month before examination. For remaining things, you can refer my that lecture. Now, when it is about 1 month here, so my advice to you, at least start allocating 3 to 4 days to each paper if you are taking two groups, and 7 to 8 days for each paper if you are taking only single group. Now, at this moment of time, please student, please note, of course, you must have gone through the theory, but my request to you, just prepare some small notes and bullet points so that they will be proved to be very helpful in your examination. And most important, refer examiners comments on the performance of candidate previous from the previous tested answer. It is very important because it is like that learning from the mistakes of others. We have basically categorized in what type of what is the performance, what was the performance, and where exactly the performance has been lacking behind, and what are the reasons for the same. So by if you are well versed with the reasons in advance, so you can avoid these silly mistakes in your examination, and of course you can get the good marks. Next, very important, try to attempt at least one mock test in examination like condition and locate your mistakes. Now, student one, we have already come out with the first series. Now we shall come out with our second series. Of course, you must have attempted our first series. Now, my request to you, please at least attempt one series in examination like condition so that it will provide you speed, accuracy, and time management. Okay, of course, you will also try to manage your stress level, because once you do it in a simulated environment, of course, then in an actual happening or an actual occurrence, then it will be proved to be very useful. For example, I just give you a very simple example. Now, when the pilots are given training, they are not uh, first timer. They are not allowed to fly the plane at their own. First, they are provided training in a simulated environment. Then they are provide training with a trained pilot, and then ultimately they start flying the plane independently. So similarly, you please start taking mock test in an examination like condition that will help you to perform better in your main examination. Now, please refer RTP of current as well as previous 2 or 3 attempts if time permits. Don't pay heed to the rumors. It is very important, student. Nowadays, the time has changed a lot. In our time, there were no such social media, etc. And normally, our connect with the institute only through the study material, RTP, suggested answer, or announcement used to come. It maybe used to be disseminated by the students. And at that time, there was no student journal. There was only members journal. And in this, normally we used to go through the student column. From there, we used to come to know about any announcement. Now time has changed a lot, so there are social media is also very powerful, but my request to you, please avoid to refer any social media. If in case of any doubt, please contact BOS or ICI staff for any clarification of information or amendment, because sometime any announcement, the social media person may interpret it in their own manner for their own benefit, which ultimately creates a problem or confusion among the mind of the student. So once your mind is clear, then you, of course your preparation will be good and your performance will be even more better. A confused mind creates a hamper for your performance. So, and very important, don't skip any topic as all topics are equally important. Now, it is a very common question. Viraj and Pooja, so they are saying good morning, both of you students. Now, it is a very common question. Ask her which topic are is more important. Now, student, I am just discussing with you my structure of the question paper. Then you will realize that all topics are equally important. You cannot skip any topic. Say, okay, this is less important. I will skip the same. No, all topics are equally important. You don't know what permutation or combination of the question will be. Let us see the examination structure. Now this is a previous examination I have just picked up from there. So as usual, if I talk about the structure, as I think the instructions are given to you, you have to write the roll number at this on the receiving the question paper. Now here the question number, total number of questions are 6. Time allowed is 3 hours. Total number of printed pages may be depend on every time there. Now maximum marks is 100 and this is the code of the question paper. As in our CA examination, name of the question paper is not mentioned. Now here, when we talk about, very important, always student please remember, whenever you sit in an examination, although you are, it is just a practice and it is but please, my request to you, always thoroughly read the conditions. Okay, like here it has been mentioned that first of all, this is relating to your medium of the answering the question paper. Now here the question number 1 is compulsory and candidates are required to any 4 from the 5 rest. It means, of course, this question will be carry the 20 marks and this will also carry the 20 marks each, so that the total will be 100. Okay, very important. Working notes should form the part of your the respective answer. It is very important because sometimes students normally carry out working in a rough work and then they write the answer. Of course, they will lose the marks because rough portion is not evaluated. Now, for example, here the question number first is of 10 marks. Generally, it can be of 8 or it can be 12 also. Okay, now next question is of 6 marks as usual 8 and or 8 or normally 8 or it may be 4 also. Now fourth question will always generally as per practice it is a theoretical question and it will carry the 4 marks. Now student, you see here this topic is from your derivatives. Okay, this topic is from the forex and this topic is your security valuation. Okay, student, now you can see that security valuation, forex, and derivatives. So this is a combination of the 3 topics. So suppose if you skip the derivative, of course, you will not able to attempt this question. Okay. In case if you skip the forex, you will not have. So ultimately what happens? You will start losing the marks and ultimately the weightage of attempting the question paper will be very less. Okay. It may be possible that if you do like that, uh, okay, okay. Just hold for a minute. I just take up your queries. Okay, Pooja and Panduru, I just take your query. Okay, just 2 minutes. Now here, please note that the structure of the question paper is like that. So ultimately, normally what happens if you start skipping 1 or 2 topic. Okay, so it may be possible that you may not even able to attempt the more than 70%. Even one topic is skipped, it may be possible that if 2 topics are skipped, it may be possible that you could attempt only 50 marks. because you cannot say from what topic the question will be asked. Okay, so you have to go through all the topics. Of course, as per in human nature, you have some one more favorite topics where normally whenever you start revising, okay, you will start enjoying this, practicing more and more question on the same topic as usual, as with me also. And I was been doing, but of course, I cannot ignore the other topic too. I have to have some idea, even a good idea, not a some idea, a good idea is prerequisite to get good marks. Now, this paper is a very scoring paper, and even this paper, you can say, provides a leverage to cover the required percentage for the other remaining theoretical paper. So, students, please pay attention to the strategies, pay attention what we are discussing today, so that you can score good marks. Now, Pooja Kumari is saying, she's saying, sir, please provide any contact number, no other source by which we can immediate respond for resolving query. I download app and send queries, but not response, and there is no restriction on sending the query. Please help me out. Now, Pooja, please note that last week you may have, if you have sent the query relating to SFM, maybe I am not be able to answer the same because I was out for some official work for the complete week. And of course, in a 1 or 2 day, I will reply your query. Now, in that case, you can also do one thing. On a website, there is a list of telephone number of the concerned faculty. If you are, even you can contact over a telephone to the concerned faculty, and in case if you have any issue, then you can contact us. Sir, SFM is scaring the most among other things. Please help me out. How to get? I'm not getting comfort in. Pandur, please note that better. SFM is not that typical question, or you can say it is not that difficult. Here only the basically mathematics and logic applies. Now, normally what happens, there is a very rumor that there are a lot of formulas in the SFM paper, etc., etc. My submission to you at except 2 or 3 formulas, there are not formulas are there. Even in our, if you go through our classes, we use less and less formula. More and more insistence we give on the conceptual clarity. So please develop your conceptual clarity, then you will enjoy this paper. And of course, most important, normally student worries about that they cannot attempt the theory. My request to you, please student, please, theory is equally important, because what happens, normally students start solving the numericals or questions without referring to the theory. In that case, what happens, normally they major there are two things. First of all, their performance will be hampered because one question is compulsory of the theory. Second, if sometimes your concept get clear once you go through the theory. So where we can contact on a website, Pooja, I think you just type the contact at BOS, something you will get. Okay, or you can do one thing, you can send us the email. Okay, so you can send me the email, then I will get you send the link. Okay, that I will share my email ID in the end of the class. Don't worry. Now, student, let us start with the discussing with the topic. What are the various topics normally that are covered in our CS syllabus? So, student, let us start discussing one by one topic quickly. Of course, I know that you have gone through all the syllabus, but quickly I will give some tips, or you can say it is some helpful points that will make that will help you to you gain good marks in your examination. Now, student, this topic is basically if you the learning outcomes are strategy, decision making, interface of financial policy, and with the strategy management and balancing financial versus sustainable growth. So these 3 topics have been covered. Now, sustainable growth means basically the growth that can be maintained, because even a high growth is not good, because sometimes this good growth is not maintainable, and ultimately the company may lose its value with the passage of time. So sustainable growth means at least some growth need to be maintained. Sir, hello, sir. One small question. This is regarding the last attempt in the old course. What precaution should be taken? We will tackle difficult paper. Thank you very much. Chavli, Chavli, Funny, Vaishnavi. Beta, please note that although it is an attempt in the old scheme, but don't worry. Okay, precaution you have to take only whenever a question comes. I just will share some small tips with you in the end because whenever the question comes, read the questions carefully. Okay, don't worry. I will in the end I will share some tips so that it will help you to score the marks in examination. So, okay, so this is a basically a topic is there. First topic is there. It is normally theoretical oriented. However, for the last some year, numerical questions have been asked from this topic also. Okay, so like for questions for the sustainable growth rate, in one recent examination, the question on the one topic external funding requirement have also been examination, though it is not directly related covered in the study material, but we shall share some question answer with you so that you can attempt the same. This is in our previous examination. Okay, student. Now let us see. And more important in this question, in this theoretical paper topic, it is very important that normally this topic is normally ignored by some students say कि I will attempt the theory in my own words. Don't do like that, beta. Please make your clear cut notes because in a normal complaint of the examiner in from this chapter is that student normally write student writes only headings. Normally, what they do, they normally write the heading. That should be the case. Along with the heading, you should also write the some detail along with the same. Only then your answer will be complete. Okay. Now next topic, I'm coming with the risk management. Okay, this topic is basically the identification of the various type of risk, evaluation of the financial risk, value at risk, evaluation of appropriate method for identification and management of financial risk. Now, student, the purpose of this topic is basically to make you aware about the basic concept of the risk and especially in context of finance. Because a major part of your paper of strategic financial management is concerned with the risk management. Of course, there is a elective paper for the same, but that we can say that is a overall scenario based risk management where all the risks have been covered. But here in the paper of SFM, our more concern is with the financial risk management. And that's why here our more emphasis is on financial risk. Now, if we talk about the appropriate method for identification and management of financial risk, if we see that there are some where around two or three topics are there. First of all, we cover derivatives from index future. We hedge our portfolio risk. Okay. From there is a then there is a topic of foreign exchange risk exposure and management. From there we hedge our forex risk. Means when we deal with the company, when we deal with the outside India, then how we manage the risk. Okay, I will take. Which I just told in time. When merger acquisition will be come, then I will take. Then there is a interest rate risk management. Now, in this interest rate risk management, we cover the topic how we hedge the risk when, because the risk can be both way. If you are investing and if you are borrowing, both way the risk is there. So all these are risk have been covered briefly, and but their management is covered in the respective chapter. Of course, there is a credit risk also there, political risk is also there, but credit risk means defaulting in the payment. That is not exactly can be covered because it is a part of the your risk management paper. Here we know we discuss the various techniques to has these three kinds of the risk. And value at the risk basically a topic where we know at what position we can take. It is a very important concept because it's somewhere around in 1990s. This concept has come into the picture where I think Citibank has first, I think some investment bank, Citibank or some other bank, I'm not exactly recall the name. They have first time used it. So it is very important concept, and of course theoretical as well as numerical question. Both type of questions are can be asked, theoretical plus numerical. Both type of question can be asked. Normally numerical, generally questions relating to where has been asked. But recently in one examination, even a combination, because where is totally some kind of a concept which can be applied with along with another concept also. So I think in one of the previous examination, a combination of portfolio management plus where concept has combinedly a question has been asked. So you should be thorough with the concept of the where. Okay, then it certainly it will help you to attempt the numerical questions from this topic. Then next comes the concept of funda security analysis. Of course, there are three major concepts are covered: financial analysis, technical analysis, EMH. When we talk about this topic, normally theoretical are asked from this topic. However, numerical are also asked. Generally, they are from the EMA or testing the EMH, testing the degree of EMH. Means what degree of EMH is there. So normally questions are asked. This type of questions are a little bit complicated. You can say there are more calculations are involved. So generally they comes and of course they can come anytime, but the frequency of these numerical questions is quite bit less. So that's why this topic is more important from theoretical point of view. However, practical cannot be ignored at all because the question has been asked. Even in a one recent examination, a weak form of a question on testing the weak form of EMH has been asked. So it is very important. You just I will just provide the link to you the questions, so you can refer the questions from there, then practice them. So and so far as a fundamental is a very theoretical topic. Technical, when we talk about a technical student, please note that there is a concept of charting. Now, so far as the charting and technical analysis is concerned, the topic is very vast. However, here we have covered in very brief, but you should have a thorough idea of the same. Whatever things we have covered, I think that will suffice. This is suffice, and question is rare chance that question will be beyond this the scope, because the scope is very wide of these topics. Now, this is one of the very most celebrated topic among the paper setters. Student, please note that as I discussed my in previous class also, the security valuation is basically related to the topic of cost of capital that you have covered at your intermediate level. Because there you have to compute the, just I show you, you have to compute the cost. Say for example, cost of debt. That is, you need to compute. Okay. Or you can have to compute cost of preference shares. AP. Okay. Then cost of equity shares. AE. You need to compute this type of a cost. However, this was you were in intermediate level. You need to compute this. Here what happens? They are provided to you. Okay, they are given to you in the question. Now you have to compute the intrinsic value, justified price of the same security. So they may be given you in the form of YTM. Okay, yield to maturity, expected yield, the yield in the market. You may be provided like this, and you have to compute the intrinsic value of bond. Similarly, you may be given the expected return. Then you need to compute the fair value, or you can say justified price. Generally, questions on this is a rarely there. Most of the questions are on the equity. Okay, here you are given the expected return, and generally these returns are calculated using the CAPM model, which is related to dependent on the two things. Three things we can say that: risk-free rate of return, beta, and market return. Okay, so this is ultimate. So from this, we the at appropriate risk level, what is the risk of a particular security, and as per the risk of the security, what is the justified return, and from that return we compute the estimate the expected return, which will help to compute the, you can say, the fair or justified price, or price, maximum price to be paid to acquire the equity share. So that you have to see how we can use this. So basically this topic is concerned with the valuation of the different securities. Now another angle in this topic interesting is or one thing, one more here, from here, one more important computation is like the especially in case of equity share, we can say, because equity share there are two things: one is market price and another is justified. So if from this we can say that whether it is overpriced or it is underpriced, because we have to take the decision. If it is overpriced, of course we will not acquire it, rather if we are holding it we will sell the same. Now on the other hand, if it is underpriced, we shall acquire the same, and we shall, or if we are holding, then we shall continue to holding, because what happens when in equity is the underpriced, as per the EMH, the market will discount somewhere around somewhere or later, the market will discount the factor, and once the discount is factor, market will analyze that, oh, this is a good share, then price will increase and ultimately you will get the profit. So this is called, you can say that it is relating to your how you link the EMH or your the market price. So overpriced or underpriced, you can also look at. Another angle that can be looked into the topic of the security valuation is a like valuation of right share. What is the right? I don't know to tell you, because if you know that if you're an equity shareholder of a company and coming it out with another issue, it may offer the right to the existing shareholder that they can subscribe the shares of the company at some discounted price. So now the valuation of right share questions are also covered here. There are some two or three question, one or two questions in your study material. So this is another aspect here. Another also topic that is covered normally here is the topic of fixed income securities. When we talk about fixed income securities, here we can divide our analysis type of questions into two categories. One is period of securities is about 3 to 5 or more years, and period of securities is up to 1 year. In that case, what happens? If it is up to the 1 year, it is called money market instrument. And if it more than 1 year, normally bonds and debentures are covered here. So for the money market instrument, normally very small questions are asked, and in this the questions are relating to your commercial paper, treasury bill, and repo, repurchase agreement or reverse repo. Okay, so normally this type of questions are covered, topics are covered here. Here it is this. And a bond or debenture, when we talk about bond, here I just categorize my this. When I talk about the bond, normally there are two type of questions, or we can say three related topics are covered. One is a valuation, to discuss to decide the fair price. Okay, whether to hold it like that. Okay, or we can say it is called a intrinsic value. Then another aspect of bond is called, you can say, the it is relating to your duration, because it is relating to your volatility of the return of the bond. Because in equity, the volatility is measured by the beta, while in bond, it is measured by the duration. I will take care, Masha. Don't worry. Just I will take care. Okay. Now here, volatility of the bond. Now, there is another concept relating to the bond is convexity. That is one of the important topic, convexity, because here we have to see how because what happens, as per the duration of the bond, as per the concept of duration of the bonds, when there is a change in the yield, then how much will be the change in the bond price, because there is an inverse relationship. So this duration concept, let us know exactly, because it is a called macular duration, and when we divide it by 1 divided by 1, that is duration, we normally calculate the modified duration, and it is macular duration divided by 1 plus YTM, then we get the modified duration. Okay, now what happens when we call the duration, use the duration concept, it comes out with this curve like this. If here, if with the YTM is decreased, if it is decreased, then the value of the bond will be changed like this. However, in practically, what happens? The there is a concave curve relationship is like that. So one second. Now ultimately what happens when we draw a line? Okay, so this area, because here we see that there is a kind of a linear relationship that is exhibited, because duration is simply duration assume like that, modified duration assume a linear relationship. Convexity effect clear out this difference because it says that there is a convex relationship. Okay, so this is another aspect of the same. There is another concept relating to the yield curve that is covered here. Now, yield curve, as per yield curve theory, there is a relationship between time and yield. Okay, as per this, because normally what happens, I just give a very small example. Suppose if you give a choice to a person that you purchase 1 year bond or you purchase 3 year bond, you can purchase any of the two bonds. Then, of course, if 1 year bond, I'm okay, I just changed my because 1 year is up to, say I offer a person a 3 year bond rate of interest, say 8%. Okay, now if I say you can buy 5%, you can buy 8 year, the rate of interest will remain the same. So what do you think? Whether he will be interested in buying this bond, whether he will buy interested in buying in 8 year bond? 8 year bond? Of course not. Because he will want some compensation. He will need some compensation for this 2 year risk. Because suppose if after 3 year the rate of interest becomes 9 year, and if he has purchased the bond of 5 year, of course he will money will get stuck for the 2 more years. So here that's why he will expect some more. It can be anything. So like similarly, if for the 8 year he may expect 10 year. So the shape of the curve, like here a period, here the rate. So the shape of the curve will be like this. This is called upward sloping. So normally this is the position and this is a normal curve, behavior of the curve. However, there can be also a possibility. First example I have given here, 8 year. This is 8. This is it is called flat yield curve. Sorry. This is 8% irrespective of any time. This is called flat yield curve. Okay. Then there is a downward. Here, it is somewhere like that. If I am investing for the 3 year, the rate of interest is say 8%. For the 5 year, it is a rate of 6%. For the 8 year, the rate is like 5%. So here it is downward sloping. And this is the indicator. This is the indicator of say recession in the economy. Recently in USA, the curve shape has like that. So it is now considered as a recession indicator of the recession. So these are kind of a, and what is the use of this yield curve? Now from the yield curve, we get the YTM. And on this YTM, agar bonds are valued, these form the basis of the bond valuation. This forms the basis of the valuation. So another category of this fixed income securities, this is called debenture. In normally for the debenture, there are questions on the convertible aspects are covered, and various like what is the differential ratio, what is the conversion premium. There are some parameters and some questions are there that you can see how we evaluate or we value the convertible debenture. Now, why question rises, why we take a convertible debenture route? Normally, what happens? Convertible debenture routes are taken when we want to acquire the share of any company, and they are the shares are not freely available in the market. In this case, the convertible debenture is a good route where you can acquire the debenture and get them converted into the equity share. So even this kind of a questions are covered in the this topic of this debenture under the security valuation. So I hope student you have an idea about how the topic of security valuation is important for you, because most of the sometimes many questions are asked. And even please note that student, when we talk about the merger acquisition that we will discuss later on, then the question comes valuation of the company. Of course, this is another chapter. Now, when we talk about the valuation of a company, then the question comes how we value. Of course, we value by there are some methods are there, but if we consider the shares as a basis of valuation, then of course the security valuation will come into the picture, and then the value will be computed. Okay, student. If you have a query, then I move further. Mansa is asking, sir, what is the difference between expected return and discount rate? Mansa is asking, what is the difference between expected return and discount rate? Discount as IRR, same as IRR, expected rate of return to be taken as cost of capital from investor perspective. Now, Mansa, your observation to some extent is correct. Normally, IRR is used in case of debt or bond because they have some finite period of. So here normally we use IRR and ultimately it yield to helps to calculate the YTM. Okay, on the other hand, the expected return concept, of course, expected return is just like YTM because YTM is minimum required yield. Expected yield, expected return, if we call use in context of bond, it is same as YTM. Now, when we use in context of shares, okay, now here it comes like where when we use the formula for the cost of equity, KE divided by T1 upon my P plus G. Now here it is a minimum required rate of return because price is there. This is dividend, this is this. So we came to know this KE that we have discussed in our cost of capital. But here what happens? When we talk about the expected return in context of equity, as I mentioned earlier, we use CAPM model and we get KE. From this KE, our value is just, we kept it value this year. Dividend is known to us, growth rate known to us, and this value is unknown. So from this, we compute the value of P, that is come D1 upon May KE minus G, and this value gives us the justified price or the maximum price that we should pay for a share. Okay, so this is the case. This is how you came to know this is the difference between the same. Okay, Mansha, I hope the difference is clear to you. Pooja, I will take your doubt when I will discuss the topic of merger and acquisition. Now, next, another topic comes. Yes, student, one thing more. I would like to discuss one thing I skipped in my mind. Here I am. Now, sometimes they doubt rise in the minds of a question, sir, up to what decimal point? The figure should be rounded off. Now, student, please note that in questions on the security valuation, normally just as a practical, the shares are never quoted in a say up to 2 decimal point only. So you just write the used when you value the security up to 2 decimal point. However, when we are computing duration, unless and until see whatever the instructions, first of all, very golden rule. I am just regarding this decimal point. I am just describing you the golden rule. Golden rule is like that: follow the instructions given religiously. Okay, if restriction, if any instruction has been given, then follow it religiously. Unless get hint, if not there, get hint from the language or data given in the question. That is more important. You have to see what the say, if the some there some hint like present value factor may be given to you in the table in the. Okay, if present value factor table has been given to you in the question, please follow the same religiously. Don't consider your own values, own decimal points. Of course, if there is any error, then you can consider the correct value. There is no problem. But if up to what decimal point they have given the value, you consider the same. And you can round off the figure up to, if nothing has been mentioned, then you can round off the value of the security to 2 decimal point. For duration, my advice to you, please consider up to 3 decimal point. Okay, for the duration, normally 3 decimal point as normally we use in our numerical questions in the study material. So this is one of the very important point, and this is normally students have doubt on the same. Now next I am coming to the topic of the portfolio management. Now, student, this is a topic. Of course, the outcomes, learning outcomes are there, and because there are many theories like Markowitz model of risk return optimization, Sharpe single index model, capital arbitrage pricing, portfolio evaluation means there are three methods are there. Basically, Sharpe index model. Okay, then Tranio ratio. Okay, Sharpe model. Then there is a Jensen alpha that outperforming the market. And even the sharpest optimal portfolio, basically the sharp optimal portfolio topic is there. It is you can say it is kind of a replacement of a linear programming model. It is quite bit complicated, but there are one or two questions I cannot. Then there is a portfolio strategy, rebalancing, etc., where you can have to rebalance the strategies, like there are some buy and hold, constant ratio plan, con- constant performance portfolio insurance, constant proportion portfolio insurance. So there are these theory types of questions have been covered here. And recently some question has been asked where as I discussed with you, the question has been combined with the where. So even the mixing of the two topics can be asked in a can be seen. So my request to you, you should get your concept very, very clear. You should not have any doubt on any concept. Of course, this is a theoretical as well as numerical, of course, more numerical oriented topic, and questions are asked, and even it is used practically. So some theories are there. There's asset allocation strategy. Pooja, I think asset allocation strategies are there. That is like statical, tactical, and there is somewhere I not exactly recall the same. Tactical, one point is this, I don't exactly, so you can refer the same. I will discuss with you separately, or You can refer our lecture, because right now I cannot discuss any topic in detail here. The strategies are like tactical, and I not recall his name exactly. Now there is another portfolio revision and rebalancing asset allocation strategy, fixed income portfolio. Now, students, this is fixed income portfolio strategies also nowadays are covered. Now, what happens? Actually, what happens in India, the equity market, bond market is not that much developed. However, in Western world, the bond market is very developed. So the there the bond market is there. So there the fixed income strategies are also play a very big role. Okay, this can be strategies like barbell strategy. Okay, barbell, and there is a barbell, and there is one ladder, barbell, ladder, and there is one more strategy here, barbell, ladder, and there's one. Let me check. One strategy there. I don't recall its name. Sorry, 1 second. There is one strategy. I'm not forgetting his name. Barbell. There is bullet. Yes, bullet, barbell, and ladder strategies. So these kind of strategies, even one important point is covered here, is related to the concept of immunization, that is related to your bond valuation topic of duration. Now, what is immunization? See, student, what happens? There are two kind of a risk in a bond investment. One is, uh, you can say, yield risk. Another is reinvestment risk. Now, suppose if you invest in a bond whose period is 3 year, and you can reinvest for the 2 year after say 3 year, so uh, for the 5 year. Now what happens? Today the rate of interest is 8%. It is a zero period. Okay, and after 3 years, if rate of interest rises to 9%, okay, then what happens? If you see, say, if you don't invest the money, say you straightway invest the money for the 5 year, then of course you are taking that, because if you invest the risk for the 5 year, you may be getting 8%, or you may be getting 9%, but here, or you may be getting say 8.5. So what happens? If you reinvest, it will be beneficial for you, because if you invest for a long period, then of course you are losing the benefit of 9%. But what happens, it is called that two risks are inversely related. One is price risk, because price and yield are inversely related, whereas reinvestment risk is not there, because if the after 9 year, say after 3 year, if you sell your 8% bond, it will not sell at par, it will sell at discount, but you will get the benefit of reinvesting of 9%. So these are oppositely related. So you can say price risk and reinvestment risk are opposite related to opposite, in opposite manner they are related. So to overcome this, how much we should invest to meet some target, we use the concept of bond immunization. We use the concept of bond immunization. Yes, Pooja, it is integrated, strategic, tactical, but I cannot cover here with some example because it will take a long time. Okay, that I have seen here. Okay, students. So it is one of the important topic also covered here. In a theory, portfolio management, normally uh, various type of questions has been asked, like risk return trade-off, very important, and there is coefficient of variation, then minimum portfolio minimum risk portfolio, and even most important use here is the concept of beta, because beta is the indicator of the systematic risk. And from the beta we normally used to compute the related concept like portfolio beta, and even how can we hedge the risk of our portfolio. Now please student note that when we talk about the portfolio management, and if we have to say our increase our, now say I say the beta of my portfolio says they say 2.4. Now I want to increase it, just I show it here. Now suppose, yeah, just leave it, my risk of the my portfolio say beta is say 1.5. Now say if I have to increase the risk, or you can say I want to increase the beta of my portfolio, so I want to bring it up to 2, then the modus operandi that I will acquire more equity share. On the other hand, if I want to reduce it, I will sell equity shares out of my portfolio and shall acquire risk-free assets. Okay, so ultimately I am doing this, I am changing my beta like this. So when we discuss the topic of portfolio management, this we can do by acquiring the risk-free securities. And when we want to increase, then we do it by acquiring the equity shares. Okay, so this is a topic normally covered here. And sometimes we have been asked to compute the systematic and unsystematic risk. Even we have been asked to answer the questions on the same topic, how we compute the same. Even we have to generally ask to compute the Sharpe ratio and use it, Kreiner ratio. Now the next concept comes the securitization. It is more or less theoretical oriented, and as per the examiner's report or the previous examinations, the overall performance has been considered good. So there is not an issue. However, at one or two examinations, the performance was not up to the mark. Otherwise, overall performance was good. Now, next topic comes the mutual fund. Of course, the learning objectives are there, like what is the basic of the mutual fund. Valuation, classification, type of scheme, advantage, drawbacks, and terms associated with this. Now, normally, both theoretical as well as numerical questions are asked. Of course, the weightage of the numerical questions are more here. More or less, the questions performance is on an average is good. Because the question may be starting from the very small question like computing the NAV or return. Small questions can be there, and can be a long question like say computing the return. Sorry, under say two plans like reinvestment plan or dividend plan like that. So you have been asked to compute what is the value of the, what is the return of from this. Now there is another good questions are have been come. You have been called to compute the comparative return among two or three scheme. This is one of the very celebrated question. But sometimes what happens, uh, you have been provided with the return, then you have been asked to compute the holding period, because this has happened in, say, somewhere in May 2018 question, when this the first attempt of the current existing scheme question paper has come out. There was one question uh, where the where the question what happens where the question was from the study material, where the yield we have to calculate of the three secure investment is there. So you have been asked to, the yield have been given to you, and you have been asked to compute the holding period of the same. So this was a kind of a question. Now interestingly, in a one or two previous attempts, in a question you have been asked to compute the opening NAV with a good data. You have to move in a reverse manner. This is one or two attempts this question has been asked. So variety of questions can be asked from this topic. One important point here, student, please note. Whenever we attempt the question on this mutual fund, of course, the tax provisions play a big role. Please note that some this is not a tax paper, so it may be possible that the tax provisions may have undergone some changes, but you know to go bother for the same. Whatever way the provisions have been given in the question itself, please go by the same. Don't touch upon the topic of the what is practically nowadays going on, because the tax provisions are keep on changing and they are taken care of by the respective paper of direct taxes. Now here just whatever with the figure or data has been relating to tax has been given, please consider them religiously. Don't change them as per your own perception or as per your own better interpretation. Whatever has been given in the question, you go by the same. Now Pooja Kumar is asking, sir, tracking error. Student, tracking error means is evaluation kind of a mutual fund scheme. How you are performing, because what happens, especially in case of a mutual fund scheme, they normally tend to benchmark their portfolio to some index, etc. Now from there they compare their own return. Now if there is any deviation, that is called tracking error. Now this is one of the very important topic, and normally a student have a lot of apprehension about the same topic, because whenever we talk about the derivatives, now after especially in the COVID, post COVID, the trading in the derivative segment of the Indian capital market has increased manifold. Now, student, please note that as we declare in our all classes, we never promote trading in a derivatives at all. At this from this platform, never promote any student. Okay, whatever you want to do, you can do after passing your examination. So, and moreover here, the most of the concept are theoretically oriented. So maybe practically may have some difference. Practical application may have some difference, but here we have to go by the what is written in the study material and what are written in the our study material, different sources from of ICAI. Now, when we talk about derivative, these are the most usable contract, because see what happens here. The topic is important because here in this chapter the underlying is basically stock and index. Okay, even for this same. Here the underlying are index and stock. Whereas this application of both concept of index, forward, future and option, that has been covered under forex. The base is same. The base is same, and here interest rate risk. Okay, so the concept of the forward and future, the concept is discussed here, but its application is contextual in the stock and index. Now here, this is further in the two chapters, that is chapter number 9, that is next chapter. Okay, and here the chapter is basically the chapter number 11. Okay, so here the two top, because the concept will be the same. Now student, regarding future contract, there is concept called index future. Okay, now I just take you back to the one mutual fund question example that I've quoted here. Now in this question, where the beta of the existing portfolio is 1.5 and if we want to increase it up to 2, so or we want to decrease it to, now here we are using it through the fixed interest risk free, acquiring equity share, and here risk free shares of the securities. In case when we talk about the beta adjustment of the beta through index, so index future can be used to increase or decrease beta of portfolio. So there are questions are there where it has been given how you will use this index future to increase or decrease your beta. Now normally for the swap, if we talk about swap, of course there are equity swap, bond yield swap, but normally swap concept is used in case of interest rate risk management. And questions are there. Then there is a next is commodity derivative, where we have to compute the hedge ratio, because sometimes what happens, exactly we cannot get the same commodity for hedging, so we have to go by taking the position in another commodity future, so there we can use the hedge ratio. So all this topic has been covered here. Okay. One more point, other point. Now, when we talk about the derivative, the type of questions are considered as valuation of forward or future contracts. ठीक है ना? Adjustment of beta that I have discussed with you. Then we talk about the options. Then there are two type of option: put option, call option. And what will be our gain or loss in if we take the option? Then there is there, and there is a concept of valuation option. While these are valuation of this is bit quite straightforward. Okay, because the cost to carry model applies to the same. Here when we talk about the option valuation, then there are three techniques: binomial model, risk neutral model, then there is a Black-Scholes model. Okay, when we talk about the Black-Scholes model, there is a concept of area under normal curve that you have to be thorough with, that I will discuss with you. Area under normal curve, and there is a concept of Greeks. Okay, now when we option valuation, we talk about So we can use the binomial model or risk neutral model. When we talk about the binomial risk neutral model, one or more or less they are same, except is that here we use the probability concept and here we use the concept of delta. But ultimately that will lead to the same result. Now Black Scholes model is quite different, and a lot of inputs are required. For example, here we require the exponential value, okay, area under normal curve, and you should have a clear cut idea what area under we normal curve we are considering, whether it is a single area, single tail area, whether it is a two tail area. So that should be very clear to you which type of we are using area under here, or cumulative area under the curve. Okay, so that this is a, say we can say it is a kind of a cumulative, it is kind of a single tail, and it is called double tail. So all these aspects are covered here in our study material, and you should be well known with this. So, or and this type of questions are asked in the derivative. Black Scholes model, of course, one or two time question has been asked, but theoretically this topic is also important. Now I am coming to the next topic, and I think this is one of the another most celebrated topic of the forex, and even it is one of the most favorite topic of the students, because not only this topic is you can say strategically important, but this topic is also interesting because nowadays there is a war, there is some talk is going about de-dollarization. Now there is a concept is coming out, de-dollarization. Earlier there was a dollarization, now there is a de-dollarization, because now the countries are trying to settle their inter transfer, their inter trade, whatever their inter settlement, not in a dollar, then in another currency. So it is called de-dollarization. Now this topic is, of course, here this in this topic various concepts and a lot of things are there, because all things we have covered in our classes, but I'm just giving you a brief about the same. Here purchasing power parity, IRP theory, okay, these are there. Then their exchange rate determination called concept, say bid and ask rate, and there is a concept of premium forward premium, because or discount, it can be discount, forward rate can be at a, so all this topic has been covered here. Now there is a foreign currency, it is basically a theoretical topic. Now when we talk about the transaction, translation and economic exposure, of course translation is taken by the paper of financial reporting by referring the respective accounting standard. So far the transaction is covered, then there can be your internal methods, then external methods. Internal methods are there where no outside parties are involved. This is normally used or called leading, lagging, okay, invoicing in the home currency, like this are there. Whereas in external method, there are three or four some major topics are there that I'm covering here, like money market hedge, okay, then derivatives. In derivatives, there is a use of forward contract, forward futures, and then option. Majorly this is there, of course there will be some other topics also, but these are normally the important, or you can say most used topics, are most discussed topics in our questions. Now, when we talk about the forward, there is a concept called execution of the execution or the fate of the forward contract. Where the concepts are involved like delivery, cancellation, and extension. All these are covered here. Okay, in case of a future contract, there is a concept of future. Say, if we are receiving the foreign currency, then if we want to sell in the foreign money, then what is how we shall take the position. And there is a concept of option. When we talk about the option in the foreign currency context, here the major problem in context of option contract, the most committed error is wrong position taken by the students. It is very important. Student, please note that this is a very common mistake. I just give you a very small example. Now suppose if I'm an Indian exporter, okay, I am exporting, say, I'm exporting, say, to the Japan. I will not take the dollar because dollar is normally used. Now suppose if I am exporting to the Japan and I will receive the Japanese yen. Of course, if I am receiving a dollar, then I will have another strategy. Now, if I am receiving the Japanese yen and I want to hedge the risk, now question rises, suppose if the option contract is available in Japanese yen, okay, say it is against INR. For example, it has been mentioned that 1 INR is equal to 3 Japanese yen. This is the rate. It means if I sell if I sell 3 Japanese yen, I will get 1 Indian rupee. Okay. So here what means, or I can take it otherwise, I just taking 4, then it will be easy for us. Now suppose if the rate has been given like that, 1 INR, because this is available in Japanese yen against Indian rupees. Okay. Now here the underlying is INR. Here underlying is INR. I am interested in buying the INR by surrendering the Japanese yen. So here this currency I will surrender. Okay, and I will acquire this currency or buy. So what I will use, if the put or call option has been given, then put means I will sell. I will sell Japanese yen. Now I reverse my question. I reverse my question. Now quotation has been given like that. 1 Japanese yen equal to this. Okay. Now the question has been given like this. Suppose if it has been given like that. 1 Japanese yen is equal to like this. Okay. So what the position I will take? If the question is like that, what position I will take? Because here my underlying, okay, my underlying is all I can say like that. My underlying is this Japanese. My underlying is this INR. Okay. So I will buy the INR. I will buy the INR and I will buy the call option. I will go for the call option. So it is very important. You have to see what position we have to take. And similarly apply in the question of future. In future, you have to see what position you will take. Either you will take short position, or either you will take the long position. Okay. So you have to see what kind of a position you have to take. This is very important from this exam. And for the common question is that normally in derivatives, normally the student are performing well. Only the positions issues are there. Otherwise, they are going on well. So now we are coming to one more important topic is external method. There is a concept of money market hedge. In this questions, money market hedge, the student find it difficult because what they do, they take the try the two method in which currency we have to invest, where we have to borrow, where we have to invest. In this, please refer what is the difference, discount or premium in that currency, and what is the difference in interest rate. Accordingly, if you practice one or two questions, then you can just to you can judge in where we have to borrow or where we have to invest. I'm not cannot take the question because time is bit less. Put on yen. Yes, of course, yes, put on yen. Okay, now student, similarly, in when we talk about another external method, swap is there, but swap normally currency swap questions are not that much asked because swap is generally used for the interest rate movement. So this kind of a questions are asked in the examination. Now there is one another concept that should be very important: non-deliverable forward contract. This is one of the very important contract topic, and nowadays because as in the recently in the, it has come into the news that the government is also coming and trying to have an NDF market in the gift city itself, because gift city is not considered as in the part of it is considered as an offshore center. So they are coming out with the non-deliverable forward contract at the this is your gift city, because non-deliverable forward contract means where the delivery under forward contract is not made, and normally they are settled through some convertible currency. So this is concept is also very important. You should be have an idea of the same, because anytime numerical questions can be framed from the same. And if you are thorough with the theoretical question, then certainly you will not face any problem. So all these are topics are covered in the this is your foreign exchange exposure and risk management. Now we are coming to the topic international financial management. One more important student point as I forgot. Now here again a very good question comes: up to what decimal points the rate should be there? Golden rule, instructions given in the question. More importantly, beta, one more, if it has been given in the question that use the FIDI rule for rounding off, then please remember round off rate up to the two decimal multiple of this 0.0025, and if you don't do this multi rounding off, then your answer can be considered as wrong. If strictly if in question FIDI rule has been mentioned, please remember, if nothing has been mentioned, then sometimes students take the two rates, but otherwise I will suggest if FIDI rule has been mentioned, only then you consider the same. And as usual, if nothing has been mentioned, then hint from the question. How if in the question say 3.143 rate has been given, so use 3 decimal point. Okay, and there is one another doubt on among the minds of the student. Sir, how we take say rupees oblique dollar or dollar oblique rupee is has been given. Student, please note that you have to draw some hint, because both conventions are used. Okay, internationally generally this convention is used, where the extension rule apply. Say it says that per rupee equal to $1. This is the international generally Western world extension rule apply there. Whereas in India, kind of a thing where we use here, it is considered as a base currency, that is one number of unit, and it is considered as a quoting currency. Okay. एनडीएफ का फुल फॉर्म क्या है सर बेटा? एनडीएफ का फुल फॉर्म है नॉन डिलीवरेबल फॉरवर्ड कॉन्ट्रैक्ट. एन फॉर नॉन डिलीवरेबल, डी फॉर डिलीवरी, एंड फॉरवर्ड मीन्स forward contract. NDF forward contracts, that is the full. This is the last topic in your study material, chapter, study material chapter, second, or I think last topic. So you have to take the hint from the. Now I am coming to the next topic, that is international financial management. Now this topic can be said, basically it is see here, see, this is capital budgeting, source of finance, okay, and then it is working capital management. So all these three are covered under your FM, and here we are using the international aspect. Okay, so here the basically it is application of financial management topic in international context. So normally whenever any project the value is computed, of course DCF analysis is the base. But foreign forex rates also forex rate impacts the cash flows. Okay, because for DCF analysis cash flow is required, discounted cash flow, and for cash flow the forex rates plays an important role for computing the same. So you have to compute which rate is applicable, which rate we have to use, and how we compute the what is the discounting rate. Now another important aspect is use of required rate of return for discounting. Now here there are two concepts. One is home currency approach, and there another is foreign currency approach. Okay, so you have to see which approach we have to use in a question paper. If nothing has been mentioned, you can compute the answer with any of the approach. If nothing has been mentioned, is nothing is required, then you can get the full mark. Otherwise you have to see which approach they have been asking. There is another concept relating that is covered here, that is adjusted present value, APV approach, where this involves computation of the base NPV, then adjustment of, or vacancy side effect of side, or you can say tax adjustment of side effect of financing. So this is also covered here. This is also covered here. Normally, small questions for have been asked. More or less, generally long questions are asked from this topic. Of course, the performance are okay, but however, if important, it is important that whenever you compute the rate should be corrected computed very correctly. Because if you have computed the wrong rates, then your complete answer will be next answer will forthcoming answer will be completely wrong, and you will lose the whole mark all marks in your from the this of this question. So it is very important. Now next comes the interest rate risk. Now interest rate risk, when we talk about here, basically we have covered, and then next it comes your traditional method. Like here the methods are like that. They are ALM, I think, ALM, FRA. I think there are two methods if I'm not wrong. Or any other method, if adjust level to adjustment. Let me check just 2 minutes. Yeah, it is both methods are there. I am correct. Now, when we talk about the modern methods, then there are, say, IRF, interest rate futures, interest rate option, and then there is a swap. So normally, topic from swap and interest and FRP are calculated, but normally most of the questions are asked from the FRA, forward rate agreement, where because in a option you have a choice, but in FRA you don't have a choice. So this a variety of questions have been asked, and even one at the extension of IRO, there is a kind of a collar cap. This concept has also been covered, and questions are asked from the same. Sir, in SM, one question there is very lengthy. This is asked in. This is Pooja. I could not get your query, sir. In the SM study material, one question are there in IFM which is very lengthy. May this ask in the examination? Student, I cannot guarantee you that it can be asked in the examination, the lengthy question. However, the lengthy question will give you the concept of concept clarity. Okay, it may be possible that you may provide with some data. The some data you have calculated here, it may provide you ready made, but you have to apply the concept. So you should be thorough with the concept. Of course, if the question will be lengthy, then the marks allocation will be like that, it compensates for the same. Normally what happens, whenever the question in any one question is lengthy, other question compensate it. Please remember, there never can be possible that question paper is very too much lengthy. Normally the question paper is set like that an average student can attempt in a within the stipulated time, because you also get that 15 minutes the additional reading time. So in this generally the questions are performance is a good, and normally student, because small questions are there in the interest rate risk management. Now next I am coming to the topic of corporate valuation. Uh, in this question, student, please note, in this topic, the corporate valuation, basically it is relating to your next topic, that is merger, acquisition, and corporate restructuring. Because what happens when there is a question of merger and acquisition, when one company acquires another company, they need to carry out the valuation of the company. Now we have done our security valuation earlier. We have done the security valuation earlier, where we have computed, say, basic value of the security, fair value of the security. Now here we shall compute the fair value or the justified value of the business. Of course, the topic starts with the conceptual framework or the valuation. What is valuation? I like that. Then there is approach or so first of all, this is asset based approach. This is earning based model where the earning forms a basis. Then the cash flow, free cash flow to the firm and free cash flow to the equity. Both are very important and practically are used. Because normally what happens, it is considered that EPS earning per share can be go by, there can be some say that there can be some manipulation of accounts or they are affected by the accounting entries. But here the free cash flow means what cash available to the firm or the equity. So cash flow also forms a one of the good basis. Now then it comes up how we have two costs. Now again the cost of it can be basis can be CAPM, arbitrage or estimating beta and valuation of unlisted company. Now student, this is a very important topic. It is also called we can also call this is called like that. Say there is a geared company, proxy company normally. What we do, we ungear it, then re-gear it as per our own and re-gearing at our own capital structure. Okay, because sometimes what happens, suppose a company is entering into a new business. Okay, they don't have their own beta right now. What they do, they look for another proxy company and look out for their beta. And of course, their beta is there, but beta is basically a financial risk or systematic risk there. But what we see, what is the capital structure of that company? Now, what we do, we remove or we ungear the beta because we say if that is totally equity finance, 100% equity finance, then it is called ungeared beta. Then we readjust, or we can re-gear this ungeared beta as per our own capital structure, because we have to make a adjustment our as per our own. Now there is a relative valuation here. Normally it is also called the multiple approach. Normally, an industry may have a multiple. Say, if the ability, if we because multiple maybe say 5 or 6. So what we do, we multiply the EBITDA of the company with this multiple and get the value of the business. Then there are some other approaches to the valuation, like here contemporary other approaches are there. Under this, there are normally chop shop, economic value added, market value added, and SVA. So normally numerical questions have been covered from there, and especially economic value added is one of the most favorite topic of the examiners. So they are here. So we can say that these are the variety of the questions can be asked from this topic. And now next comes the arriving at a fair value. This is another topic where the top normally the questions are considered what is, because once we compute, because we cannot ever consider the one base. We can, of course, we can assign the different weightage to different criteria, and then we can compute the weighted average. So this is one of the method. Sir, in the reverse stock split causes of avoiding removal from the constituent index. I think Pooja, whatever the question you are asking, it is more relating to your capital market. Somewhere its application is not here. Okay, now, okay, sir. Now I know the answer, but taking too much time, so that I ask. Beta, which answer you have asked, I not know. Is not from the query. Okay, students. So now here this is topic of the corporate valuation. Now next comes the topic of merger acquisition and corporate restructuring. And student, please note in this question, in this topic, this is theoretical as well as numerically both most important topic, because by default one question asked is from this topic as per the weightages are there. So here, of course, when we talk about uh, the mainly we are concerned with the financial aspect. Of course, theoretical topics are there, but mainly we are concerned with the financial aspect, because financial framework, because financially for the reporting aspect or accounting aspect is covered under financial reporting paper. Then law or compliances part. This is as per corporate law paper. Here we take the financial. So we can say that merger acquisition is not only a very simple exercise, it is a very comprehensive exercise. It involves the application of laws, compliances, financial evaluation, and the reporting part. So except financial evaluation, other part taken by the respective field. Here in this paper, normally we cover the financial aspect. Now we have to compute, say, what is the exchange ratio. Okay, most of the common questions are valuation has been done, then it comes the exchange ratio. Okay, and what is the how we have to satisfy the cash or equity. Now there are one question one student has been asked. Let me come to the same. Sir, in few questions compared as SC reserve surplus risk weighted. Pooja is asking, sir, in few questions, care computed. Care means capital adjust. Risk, SC reserve surplus risk weighted under the few questions computed as the share capital. Pooja, I cannot exactly say what you are asking for. You can contact me, because what are cash and ratios. Okay, I could not get your question the exactly no. So you just contact me over the email or telephone, then I will discuss. Okay, because there is one common doubt in the question. There is one question. I think this question is very one of the very important related question. Let me check it. The question is capital. Okay, I think Pooja, you are talking about capital adequacy ratio. Let me check what are you saying. Now here in this question in study material 29, uh, there is a ratio of gross NPA. Okay, so ratio has been given like that 40 is to 5, but it has been taken reverse. Please, student, note that since it is a negative factors, that's why we have taken here, because it does not mean that if you have a negative value, then you will be given more weightage. So, due to giving less weightage, this has been taken. Yes, it is a capital adequacy ratio. Okay. So in this question, normally variety of questions are asked, and normally there is one other topic that is covered here is a financial restructuring. It is someone kind of a accounting adjustment kind of a question, because normally it does not have any financial impact. But however, as a part of the syllabus is normally done here, and there is a merger acquisition theory is there, premium discount are there. One important topic here I will like to discuss. One is divestiture. Now here, student, please note that nowadays what is happening. Uh, mm, Say earlier, of course, merger acquisition is there. Merger acquisition increase to the gives leads to a synergy effect, etc. But nowadays a tendency has come rising that not even merger acquisition can enhance the value of a company. Now companies have started selling off their businesses because they want to now concentrate on the core business. So this can be two way. One is sell off, or I do get it on a done page in Africa. Sell off, and there is another, you can say, mhm. Then there is a kind of a say, sell off means you just sell the business to third party. Okay, and there is another category where the three possibilities are there: spin off. Okay, then there is a split off. Then there is another category is equity carve out. In this category, what happens? The ownership remains to some extent with the existing shareholder to some extent, and here the new cash comes also into the picture. But here it is completely sold off to the third party, and the cash comes and it is used for your core business. So this is kind of a company is a capital. Pooja Kumari, which query you are not resolved, beta? Pooja, please tell, because you have sent a lot of queries. Which query could not solve? Because here I cannot solve your query because I'm not getting what exactly query capital adequacy you are asking. Okay, just contact me over the email ID. Now the last topic is coming is relating to startup finance. Introduction of startup finance. Uh, See, here is purely a theoretical topic. Okay, here it is purely a theoretical topic and not really any numerical question. Nowadays, student, please note that days are the gone because nowadays startup finance is getting very lot of importance. Reason is that the days are the gone when the business used to rise, say, from, because we used to study it like that, uh, a proprietor, then partner, then a proprietorship, partnership, private limited, public limited. The flow, or you can say the maturity of the organization along with the structure was changing like that. However, with the lot of say liberalization measures and ideas coming are out, now the concept has changed a lot. Now there are 100 startups are there. Okay, and then there is a concept of a unicorn. So now the concept of startup has, even a small child, you ask the startup, they know the startup. They say startup hai, startup hai. But what is exactly the startup and how it is financed? The because it is a totally have a different dynamics. Problem is with the startup is that it has a totally dynamics. Once you convince your investor, of course, you are flowed with the money. You are loaded with the money. But if you could not convince your investor, then there will be no money. And moreover, there are, say, we have discussed what is the pitch presentation, how you have to present your idea, because startup is mainly related to idea and how this idea can be encashed, because ultimately investors are more concerned with their investment. So all these have been covered here in the startup finance, and you should be know about the same. So theoretically, this topic is also very important, and question, of course, question will be asked. So you cannot skip this topic at all. Can you share? Of course, I Pooja beta, I will share with my number. Don't worry. Okay, student. So most probably we have some of the our topic. Now, student, something I'm planning, I will like to share some additional questions, if possible, will be there. Okay, before I just let me, one second. Before I wind up the session, I just want to share the detail that you please note carefully. Now, student, you can connect with us. Second, I think there is some. Okay, student, this is the mode, or we can, there are some, we have given you the how you can connect with us. Follow us on the Twitter. The Twitter handle is there. BOS Knowledge Portal is there. ICAI, BOS mobile app, Android is there. iOS, Apple, because these are the links have been given to you. You can this. Pooja is asking, sir, if in the question, in theory questions, the diagrammatic presentation has been given, can we use a student, if like in question of uh, CAPM or SML, then you can of course can given, but normally for the like for the swap question, diagrammatic presentation matters a lot. There you can give, then there is a notation because it can way of by presentation or one of the way of diagrammatic presentation there. Then you can write to us at SFM classes. Student, it is wrong here. I'm just writing the same. One second. It is not SFM classes. It is just like SFM dash final. Please note it, correct, make it correction at ICAI.in. Okay, you can contact me at this number. I will pick up the phone. Okay, so this is my email ID. Now, student, if possible, ये आवाज आ रही है. Okay. Okay. Now, student, I am also planning if I could. I'm just planning some additional question. I am planning some, if possible, then some time permits me, and in a 1 week or so, I will put some additional questions. Additional questions on LVC, Live Virtual Classes 6 batch. Okay, portal, I will there place some in the end some questions along with their answer. Okay, so you can refer these questions because these questions may be covered in your study material or in our discussion in the class, but still I am placing some questions for your further revision. So I think it will take 3 or more days. I will place some questions there. You can have. Sir, in theory question, few concept given can be used. In theory question, I don't think there will be need that much need. Pooja Kumari saying Monday to Saturday. No, it is Monday to Friday. Okay, from 10 to 5 p.m. Okay, to and okay, and in between the lunch is there. So please avoid to call in the lunch time, say 1:30 to 2. But other time from 10 to 5 you can discuss it. But please and another any query relating to the same, then I wind up the session, student. And I hope in today's session you have gained a lot, and most of your doubts will have been resolved. And student, please, as I discussed, please don't pay heed to the rumors. You have any doubt, but the doubt should be conceptual. You should be thorough with the concept. You have first read the concept, and if there is a doubt, then I can answer it quickly. Otherwise, if I cannot explain each and everything on the telephone, it is bit quite difficult. Okay, student. Hoping that you have, I think, hope you have noted down the email ID and telephone number as well. Now, with this, I convey my best wishes to you for your forthcoming examination, and I hope that you will come out with the flying colors. And of course, some student may be member of the ICAI. Okay, student. Thank you. Have a nice day. Of order. Uh, Dear student, please note it is up to you how you want to keep refer the same, but there is no fit. It is as per your own choice. I cannot say this is the best because it is as per your own requirement, own understanding. Because by the time you thorough with the syllabus, you can make a order choice of the order that what order you have to follow. Okay, thank you. Thanks a lot.